Okay. Glory be to God. Okay. Hallelujah. So I would like to have Mr. James to speak to. He's going to be speaking to us briefly on some topics. And then if you have any question as he speaks, please note it down. There will be a time of question and there will be a time of answering the question. God bless you. So, Mr. James, up to you.
Thank you. Oh, Christ. Everyone hear me? That sounds so good. So, hi everyone, my name's James. I'm, as Stephen said, I'm one of the directors and a mortgage and protection advisor at Less Stress Mortgages. Originally from Luton, but we've now moved up the road to Ampthill, so our office is actually in Ampthill now from the start of this year. So Stephen's kindly invited me here today to discuss some topics that will hopefully help some of you guys in the near future if you're looking to buy a property, or even if you've already got a property and your fixed rate terms is coming to an end and you need help on a renewal. So something that always sticks with me, and it's from a young age, is something that my dad said to me when I was a little kid. He said to me, the 3 most stressful things you'll go through in life are likely to be bereavement, divorce, and moving house. Now, the first 2 are obvious. Obviously, if someone passes away or if you're having to go through a divorce, it's obviously a difficult time in your life. But the third one stuck out to me as something that didn't fit the pattern, because if you're moving home, it's something that you should be looking forward to, not dreading. 9 times out of 10, you'll be upsizing your house, you might be buying your first house, so it should be an exciting time in your life. But when you speak to the majority of people about getting a mortgage, they all have the thought that is a very stressful thing to go through, and they just don't look forward to it. Or when you've already got a mortgage and you need to remortgage, everybody just doesn't look forward to it at all. So, yeah, having a name like Less Stress Mortgages kind of heaps a lot of the pressure onto us to try and remove all of that stress. But we have a team in place and kind of implemented processes to try and do that. And I'm hopeful that Stephen can vouch for us. I think we did his mortgage. It was stressful at times, definitely. But we got there in the end, and he got to the goal and destination that he wanted to. So glad that we could do that. So getting on the property ladder can be difficult, especially nowadays with the cost of living and the interest rates being a lot higher than what we've become used to over the last few years. There are a couple of lenders who are offering kind of schemes and easier barriers to entry. So there's a lender that will do a mortgage that just needs a £5,000 deposit, and then that's on a property up to £500,000. So that could be as little as a 1% deposit to buy a house. There is still a lender that will do a 100% mortgage, so you don't actually need a deposit, but there are certain criteria that need to be hit in terms of kind of credit files and rental history. So if it's something that you guys would be interested in, just let me know, and then I can obviously speak to you guys separately about that. A lot of those are for first-time buyers, but I can go, like I said, into more detail about those things if someone wanted to have a separate appointment. One of the very important things that I always speak to people about are keeping an eye on your credit file. When trying to buy a mortgage, it is quite important that you are kind of in control and have an eye on what your credit file looks like. Because if you're not organised on there and there are mistakes, missed payments and things like that, it can make it more difficult to get a mortgage. If you've had accounts in the past that have gone into default or missed payments on credit agreements, it's unlikely that you'll get a mortgage with the high street, but don't let it put you off totally, because there are lenders out there that can still help you. It might be at a slight premium, but it's not a thing that where I've heard people in the past say, oh, I've got bad credit, I can't get a mortgage. It's not true. There are lenders out there that will still consider. So if it is a case, and I know it's a personal thing, so people don't want to speak openly about it, but if it is a case that you've had some problems in the past and you think you can't get a mortgage, it's worth having a conversation, because I still might be able to help you. Okay? Now, a couple of tips as well when applying for a mortgage are to make sure that you're on the voters roll at your property where you live in. Make sure all of your credit agreements, be it loans, credit cards, car finance, they're all on direct debits as well, because that will avoid you forgetting to make a payment and then having that one missed payment, which could ultimately be the difference between you going with a high street lender and getting premium rates as opposed to going with a subprime lender. It's just going to cost you more money, all for the sake of a silly mistake. Try and limit as well things like applying for credit cards, personal loans or car finance if you know that you're going to be looking to try and buy a house in the very near future. It can impact your credit file, the multiple searches if you're going through insurances and things like that. And also, if you've got existing finance in place or high balances on credit cards, these things are going to reduce the amount that you can borrow. Okay? Quite recently, little things like, I'm sure everyone does online shopping now. If you are on ASOS and you see the option to take Klarna, where you can make the payments over 3 payments, they now appear on your credit file. And I actually recently had a case with a client that was a bit more difficult to place and actually declined purely because they'd done so many searches using Klarna. They hadn't actually taken the finance, but because the multiple searches, it was enough to spook the lender to think that they couldn't afford to buy the clothes that they were looking to buy. So now we don't want to lend them money to buy a house, because if they can't afford the clothes that they're trying to buy, we're a bit spooked that they might not be able to afford the mortgage. But don't get me wrong, there's other lenders that we can place that client with, but it's just certain lenders are a little bit spooked and can be a bit more strict on certain things. So that's just something to keep in mind as well. That kind of leads me on to affordability. So when buying a property, one of the main things about the application is based around affordability, which is usually determined with your income versus your expenditure. Now, every lender has their own affordability criteria. They assess it in totally different ways. So if you were to apply with NatWest, Santander, Halifax, Barclays, they would all give you a different maximum loan figure because they've all got different criteria and different preferences. They've all got different things and different types of income that they'll lend to. So you've got basic employed income, you might be a director of a limited company, you might be a sole trader, you might have benefit income of child maintenance, child benefits, disability living allowance, all those types of things, bonuses, overtime, commission, they can all be considered by lenders as well. So if you've got those types of other streams of income coming in, always make those kind of evident to us as well, because that could be the difference again of borrowing the amount that you need in comparison to falling a little bit short. In general, a rough rule of thumb is that lenders will lend you 4.5 times the income that is of the household or people applying. If there are a couple of lenders offering sort of booster schemes where if you're a first-time buyer and you've got minimum levels of income, they might increase the amount that they'll lend you, go up to 5 or 5.5 times combined income. But there are usually minimums that you need to hit. So, for example, I know a lender has released a new product where if you earn a combined amount of £50,000, they'll actually lend you a little bit more than what they would have if you were just below the £50,000. So, they're just trying to help people get their extra deposit together so that they can get on the property ladder. Part of the affordability assessment will be to factor in unsecured commitments as well. things like personal loan payments, credit card balances, car finance, school fees, student loans. They're all things that will impact the amount that you can borrow as well. So it's good to just keep an eye and make sure they're all organised, because when it does come to an application, those types of things will all be considered, and they will all kind of impact the amount that you can borrow. So if you've got expensive cars on the driveway with massive monthly payments, it is going to reduce the amount that you can borrow. So if you were thinking of buying a car, and a house as well, maybe get the house done first and then look at the car afterwards. Otherwise, if you do the car first, you might not be able to get the house. Okay. Now, when it comes to buy-to-let products, these are assessed in quite a different way. So when it's a residential property that you're looking to move into and live there, it's mainly down to your income versus expenditure and affordability. When it comes to a buy-to-let, the amount that you can borrow is in general determined by the market rate of the rental that property will receive. So in general, most buy-to-let products, it would require a 25% deposit. The rest can be raised by the rental figure that property will receive. So lenders are less strict on personal income when it comes to investment properties, purely because your personal income, your job, your 9 to 5, so be it, will not be funding the buy-to-let every month. It'll be the rental. Does that make sense? Yeah. So technically, you could buy an investment property without owning your own home and without even having a job as well, as long as you've got the deposit in place. There are lenders, don't get me wrong, you won't get the freedom of the whole market, but there are lenders in place who will actually lend to you even if you haven't got a job or if you've got no streams of income, purely because it's the rental income that will be paying that mortgage. Okay. Deposits can be a tricky one. Usually they'd be expected to come from your personal savings or from the equity from a sale if you're selling a property and you're moving house. More common nowadays is the bank of mum and dad. Always people relying on parents to give them deposits, which is fine with pretty much every lender. Some lenders will accept a deposit coming from a friend as well. It has to be a true deposit. It can't be a true gift. It can't be lent to them, because the lender would see that as a commitment that you would then have to repay, so they would then factor that into how much you could borrow. But if it is a true gift from a friend, then that's fine. There is also a lender out there that, believe it or not, will actually let you get your deposit from a personal loan. So you could go to a bank, take out a personal loan, which most people could do with a few questions about your personal income and your outgoings. This lender will now, because pretty much every lender is going to ask you, how much is your deposit and where has it come from? There's a lender I know of that will actually allow it. If you said, yeah, I went and got a 40 grand loan from a bank, they will accept that. But that's not me encouraging everyone to go and get a loan from the bank, because I would always encourage you to speak to a broker first, because that loan is going to come with a monthly payment over the next 3, 4, 5 years. That monthly payment will need to be factored into the affordability calculation to take the mortgage. So it might be a case that you need to check that it all still fits affordability before going and taking that loan. Last thing I'd want you to do is go and take a loan, and then you've got all that money and you can't get a mortgage because it's not affordable, because then you've just taken a loan for no reason, probably paying interest and fees, which obviously is not going to leave you in a better position. Something that we always encourage is just to be honest as well when it comes to the deposit. If you look like you're trying to manipulate or not be totally honest about it, the lender does usually get to the bottom of it. And if it is a case that you try to hide things or effectively lie about where it's come from, they usually get to the bottom of it, and they will probably make it more and more difficult for you to be able to lend. That they just want you to be open and honest about it. So always up front, I always ask you to be open and honest with me, because it might be that we would go to a certain lender and not some other lenders, depending where the deposits come from. So it's always best just to be open. And so other reasons why I usually encourage people to go use a broker as opposed to going direct to your bank, a few things are, you might not be accepted by your bank. You might bank with, I don't know, Santander, for example. They might not like the fact that you're self-employed with a large jump in income from one year to the other. So you might just fail their criteria and they turn you away. That doesn't mean you can't get a mortgage elsewhere. It just means you don't really tick their box. When you speak to a mortgage broker, they'll have knowledge across a whole host of lenders. So it might be a case that you might be a temporary contractor, paid weekly. Some lenders are not interested in lending to contractors, but there are some lenders that are geared up to lend to contractors, so that's their kind of their niche. So you might be wasting your time speaking to 6, 7, 8 banks, taking you weeks, months, and you might lose the property that you wanted to buy because you can't find the right lender that will lend to your personal circumstances. So we always encourage to speak to us guys because we should have broad knowledge, or we can find out very quickly who will lend to you based on your specific circumstances. Also, if you were to just walk into your bank, they can only offer you what they can offer you, their products. So they might have 10, 11 products that they can offer you. They might not have market-leading rates at the minute, so you're kind of restricting yourself just to what they can give you. Whereas if we're a whole-of-market brokerage, we can access pretty much every lender that you can think of and make sure we're finding you the cheapest, most suitable product for you. Another thing is speed as well. It could take you a couple of weeks to get appointments at banks. A lot of the time, if you walk into a bank, they don't want to speak to you face-to-face. They tell you to go online and make a booking. Whereas if you called us, either myself or one of my colleagues would realistically be able to speak to you within the next 24 to 48 hours and hopefully take it from there. A good example of that, I recently had a client give me a call. It was out of the blue, I didn't know him, got a random phone call. He said, I've got a property, I've got no mortgage on it, I own it outright, I need you to raise me a very small mortgage on that property. As usual, what's the money for? Trying to get a picture of what we're doing here. Well, I've found another property that I want to buy, and I want to go and live in that, so this property I'm going to be renting it out. So that's classed as a let to buy. You're letting out your property to go and buy a new property. I said to him, that's fine, what are you doing about the new property that you're buying? Have you got a mortgage in place? Yeah, I've already done it, I've got a mortgage, I went direct to my bank. Okay. Can I have a look at that for you? Because I could probably get you a better deal than what you've got in place. And he said, yeah, no problem, they've lent me a 75% mortgage, so I need a 25% deposit, hence the reason I'm calling you, because I need to raise money out of my current property because I haven't got the 25% deposit. So I need to raise money on a buy-to-let mortgage so that I can put that towards my deposit that I've got. He let me have a look at it, he sent me the offer. I was able to get him a 90% mortgage on the new property, meaning that he didn't need the mortgage on the small mortgage that he initially called me for, because instead of putting a 25% deposit down, he now only needs 10%. So he didn't need that mortgage on that property, so he's now going to be getting, I think it was £1,200 a month rent on a property with no monthly payment and just taking out a residential mortgage. So instead of having 2 mortgages, he only needs 1. And that was purely, that's like a prime and current example which happened in the last week or so of someone who just went directly to his bank thinking he'll save time and money by doing it, but then he spoke to me because he couldn't work out how to get the deposit, and then we were able to make it much more simple for him, get him a better mortgage, lower rate, and actually borrowing more money, meaning that he didn't need to secure against both houses. So that's like a prime example of where we can help in comparison to you just going direct to your bank. Okay. So in regards to foreign nationals as well, sometimes you might think if you haven't been living in the UK for long enough, some lenders might not be interested in that. It's true. Some lenders need you to be living here or have certain visa statuses to be able to borrow. There are a few lenders out there that are more favourable. If you've been living in the UK for 12 months and you've got 12 months left on your existing visa, then they'll like the potential to lend up to 90%, so only a 10% deposit. If you've been living in the UK for 5 years, I know there's a certain lender that will just totally disregard the fact that you're not a UK citizen, and they will lend using just standard lending criteria. Also, there's lenders who are more favourable if you're what they would class like a high earner. So if there's joint income from a couple that are earning around £65,000 on a combined, then they will lend you the 90% that you might need. So again, it's worth speaking to a broker instead of going directly to your bank, because they might be one of the guys who just say no, not interested. Until you've got indefinite leave to remain or permanent rights to reside, they won't lend, or they will only lend, but they will cap the loan to value, which is the percentage of borrowing against the property. Again, something to keep in mind is that lenders will lend a little bit more when it comes to lower loan to value, because the loan to value is the percentage of borrowing that you're taking against the property. The lower the loan to value means the higher the deposit you're putting down, the lower the risk to them. The lower the risk to them means that they're more lenient and they're happy to lend you a little bit more than they would have lent in comparison to someone who might say, I've only got a 5% deposit. And the reason for that is if, in the worst case scenario, they ever had to repossess their house, they basically want to know that at auction they could get their money back if they were having to sell it. So if there is a higher deposit available, you're probably going to be able to borrow more and get a bigger house and get that mortgage more easily. Okay. Finally, before taking any questions as well, I always like to point out to people that although we're called less stress mortgages, we don't just do mortgages. So one of the really important things when buying a house is that you are taking out a protected mortgage. So what I mean by that is taking out mortgage protection in a sense of life insurance, critical illness, income protection. These are all things that are all strongly advised when taking out a mortgage. It's all well and good taking out a £200,000, £300,000 mortgage, but if someone was to get ill or something even worse happened, you want to make sure that your family is protected and that you've got things in place that, in the worst case, that it could be death or serious illness, that your family's looked after. So we can arrange life cover, critical illness, income protection. We can also do the buildings insurance that you legally need to move into a property. We can do wills. We can do bridging finance, commercial finance for people trying to go into sort of office blocks and things like that. We also work closely with removals companies, conveyancing partners as well. So what we are ideally trying to be is a one-stop shop. So it's not just your mortgage, which is what most of you, if I ever got a phone call from one of you guys, I'm 90% sure it would be because you found a house that you want to buy. But we try and open things up to you and say, look, you're buying the house, that's great. Make sure your family's protected and let's try and do it all for you, make it all under one roof. We'll help you with the solicitor. We'll help you with the life cover, the critical illness cover, the buildings insurance and everything that goes with it. But yeah, thanks again for inviting me today, and I hope some of the things I've touched on can help you guys in the near future when looking to buy your house. I've got some business cards with me today. If any of you guys wanted to have kind of a personal conversation, make an appointment, my details will be on there. Just give me a call and I'm more than happy to help. Thank you.
Thank you so much. Thank you so much. You have a privilege. We're going to be giving you his number, but I need to let you know that Mr. James is always busy. Even me, he will book me an appointment. Sometimes he said, okay, I can't speak to you until next week. So he's a very busy man. To have him here is a privilege. So, I guess you need to consider your own situation. Don't look at somebody's situation before you take a decision. That's why you need a broker. Amen. I've got a couple of questions here. The first question is, can you become a first buyer 2 times? It's tricky, but is it possible?
Technically not. So every lender, well, a lot of lenders do actually have different definitions when it comes to a first-time buyer. And they will treat you differently in regards to their products that they will sell you. So, for example, I know there's a lender that's recently, I was on a webinar last week, and they will do, if you earn a combined income of £50,000, and you're a first-time buyer, but only one of you needs to be a first-time buyer to qualify for this, they'll give you the enhanced income multiples, meaning they'll lend you more money in comparison to somebody who's moving house, who's been a homeowner. So in terms of product selection, lenders have got different definition. Where the point that's probably more important to most people is where it comes to stamp duty and things like that, you get a first-time buyer relief. If you've owned a property in the UK or anywhere in the world, you're technically not a first-time buyer. So even if you've owned a property, sold it years ago, been living in rented accommodation, then find a partner, get married, one of you is a first-time buyer, but the other one isn't, technically you wouldn't get that stamp duty relief because you're not technically a first-time buyer, and you would be told to declare that to your solicitors, who are the ones who would determine how much stamp duty that you would need to pay.
Okay. Cool. I think that's awesome.
That's
what about in a case where you've already bought a house and then you want to buy another house? You want to make that one your home. You want to put this one as a rent. Yeah, rent to, you know.
Yep.
And what do we do about that?
So that's technically called a let to buy. So if you've got a residential mortgage in a house that you're living in, they're very common nowadays as well. People would say, right, I want to upsize. I might own a small flat or apartment. I've now got kids, married. I need a bigger house. So I want to put this one on a rental. So what we would effectively do is called a let to buy. We would remortgage your current property onto a buy-to-let product, usually on an interest-only basis, so that you can maximise the rental income. The way that the lender would determine how much you can borrow is determined by the market rental on that property. And then the new lender that you're buying the onward purchase house would just follow standard process. They would, 9 times out of 10, they would disregard that property in the background purely because you're going to be renting that out for X amount rent, and the monthly payment is always going to be less than what the rental is going to be. So they would disregard that, and it wouldn't impact the affordability assessment. Okay. If you wanted to buy a second house, because some people do have second residentials, or might want to go on a mortgage to help out a brother or a sister or a friend because they're struggling for the affordability, struggling to hit the income amount needed to take the mortgage, something to keep in mind is that the mortgage in the background, if it is just a residential mortgage that you're living in, that will be factored into the new mortgage as well. So that lender, they will do a credit search on you. They will see that there is an existing mortgage in the background with NatWest or Halifax or whoever it's with. Not only will they take that monthly payment into consideration when calculating how much you can borrow, they'll also take into consideration the running costs. So it'll be the utilities, council tax and things like that. So a second residential could be more of a difficult thing to do, but when it comes to doing a let to buy, it's usually fairly straightforward. As long as the new property is affordable for you to go and live in, the buy-to-let, or the one that we're switching to a buy-to-let, would usually be looked after by the rental. What some people also want to do is sometimes in the process of the remortgage, switching it to a buy-to-let, you might be able to pull out some money if the rent allows you to put towards the deposit of the new property as well. So you might be a little bit short on the amount of money that you've got in the bank purely because you're not selling the old house and you've got a lot of money tied up in there. Sometimes you're able to, in the let to buy remortgage, you could pull out some money to use towards the deposit for that onward purchase as well. Okay.
Wow, that's quite educative. The other part of it is somebody's asking, let me start from this. I believe you've answered this one. Can money be borrowed from bank for deposit if you do not have enough for deposit? I think you've answered this.
Yeah, so most lenders, to be honest, wouldn't like it. The majority don't like it. But I know a lender off the top of my head that has made it clear that they will accept a deposit coming from a personal loan from a bank. But one thing I'd always do is check with a broker to do the affordability calculation. So before you go and get that loan from the bank, you've probably got an idea of the house that you want to buy, or a budget in mind, or a size of house. Check that that's affordable to get that mortgage, also knowing that there's going to be a monthly payment on that personal loan that you've just taken. It might be 25,000, 15,000. That's going to come with a monthly payment, which could be £200-300 a month. they would factor that monthly payment along with any credit card balances, car finance and things like that on top of in with the new assessment. So it just needs to be affordable. So it's not very common, but there is a lender that will accept the deposit to come from a personal loan from a bank.
What I learned from this is you have to be very careful if you are planning to buy a house. Make sure you buy your house first before you go for car financing, or many of you that go to store and they say, buy now, pay later. It all counts towards your affordability, because you first of all remove all the money, all your loans before they can determine your affordability. So be very careful. All this shopping online and they say, you can pay 3 months, you can pay. They will do a credit search on you and they'll put it on your credit. Amen. And another thing is you need to be very careful. Make sure you check your credit very well, because that's the first thing you will do to be able to advise you. Make sure you don't just mess up your credit. Somebody's asking a question here. I also believe you've answered this. The person said, if an individual has certain flag on their credit file, how long does it take for those flags to clear, or is it permanently impact to the potential to get a mortgage property? I think 6 years or something. Anyway.
Yeah, so every lender's a little bit different in terms of credit scores and credit files and behaviours. If you want to qualify for the high street lenders, your HSBCs, people like that, you'd have to have clean credit for realistically 6 years. So no missed payments, no late payments, no defaulted accounts, things like that. Because if you try and apply with the high street with that on your file, you're just going to get a decline straight away. If you have these issues, some people, I've had clients in the past, they've had utility bills, or they've moved house and forgot to move bills over, or forgot to cancel them with the company, but they've just cancelled a direct debit, and then it's a late payment.
Yeah.
Purely because you haven't let the company know. Those types of things, you might end up going and disputing it. It all takes ages to go through, and it might not even be resolved. So it's always good to just keep an eye on your credit file. But rough rule of thumb is, 6 years. If you've had a bit of a hard time, something's happened, could be some sort of trauma in your life that's made you go down the financial difficulty. 6 years, you'll pretty much be ignored anything prior to that. But that's not to say you have to wait 6 years. I've got people who are currently in a debt management plan from some difficulties that happened back in COVID, that they've got under control now, and they are able to get a mortgage. It's not with the high street on the cheapest rate, but if it is a case that you're in a position you need to get a bigger house, you've got kids and you need more space, you could take maybe a short-term fixed with maybe a subprime lender at a slightly higher rate, short-term paying, but at least you get into this house, and then hopefully when that fixed term is up for renewal in 2 years' time, you've built up your credit file again, and then we can maybe remortgage you to a lower cost lender, lower interest rate, lower monthly payments.
Great. I believe that has been answered. Somebody's asking, if you are a couple and one of you has a bad credit and other person's credit is good, can you get a mortgage? No. It's going to impact each other.
You can still get a mortgage, but the one who's got the negative impacted credit file is going to impact the person with a clean credit. So you won't go ahead with the high street, put it that way.
Let me put this. Okay. When we are about to get our mortgage, sometimes in the past, many years back, one of the telephone bills in the house, they just roll us over. Meanwhile, we have decided that we don't want them anymore. So my wife spoke to them that, no, how could you roll us over? Just one day. And she spoke to them, and that was it. We didn't know that at the end of the day, they put something on, because it was on our name. So we went for mortgage. We didn't know. And then, because of that, HSBC, you remember, they declined us. And we were like, no, we have good credit. You know, we didn't know that those people did that. But thank God for us, we only have about maybe 6 days to expire. So he just told me, wait for after that 6 days, and then we put it back in. So, you know, you need to monitor your credit if you really want to buy a house in this country. Let me go ahead and say this. Does credit score of 999/999 guarantee acceptance and low rate for mortgage?
You would expect that a 999 credit score, which is top level, it would guarantee, but there is no 100% guarantee. Sometimes multiple searches for insurances. I had a client not long ago, they had over 100 grand joint income, so they were high earners. I think he took finance on a really expensive car, and because of the type of car, he couldn't just go on, compare the market and get insurance. He had to use like a specialist broker to broker a special type of insurance. But he didn't know that until after he'd done loads of searches on his credit file. And the number of searches had actually impacted his ability to get the mortgage, because what a lot of lenders have is, you've got on the face of it what you'll see on your Experian credit report of 999, but they have like an internal scoring system as well, where they monitor other behaviours, and the multiple searches, it could impact you. But look, in general, if you're just a normal person who's just going about your life, going to your job every day, paying all your bills on time, you might have a couple of credit cards and a personal loan, and you pay all your payments every month, you're never late, chances are you're going to probably have a 900 and something credit score. That's going to put you in a good position. If the closer you are to 999, the better it looks for you, the more likely you are to be accepted. But again, there's no 100% guarantee, because it might be the type of applicant you are. You might have been in your job for, you might be self-employed for only 6 months or something like that. Some lenders are not going to be interested in you. So yeah, it depends on the type as well.
Thank you so much. If you have a credit card and you don't use it at all, does it impact your ability to lend?
No. So where a lender would look at that is, if you've got a credit card and there might be a limit on it of £5,000, let's just say. If you use it monthly to pay for your petrol and your food shopping, but then you pay it off every month so that you don't pay any interest, lenders will just ignore that, because they'll see that you're running up a bill and then paying it every month, running up a bill, paying it every month. That's absolutely fine. They've got no problem with that. The same way, if you've got no balance on it, they'll just ignore it.
But if you have no balance for 1 year,
they'll ignore it.
Not use it at all.
Yeah, they'll ignore it. That won't impact you at all. It's only if you've got a constant balance sitting there. It might be £600, 7, 8. It might be £5,000, £10,000. Some people have high credit. They're the types of things that will impact how much you can borrow. So you can still, there's nothing wrong with that. You can still get a mortgage, but it just needs to be affordable. So that that credit card balance will potentially impact how much you can borrow, depending on the size of the credit card balance versus what your personal income is.
Okay. Yeah, great. You know, one other thing that came to mind now is when you subscribe to Experian, make sure you also subscribe to Equifax, because what is on Equifax may be different from what is on Experian. So you may be thinking, oh, I got good credit, but on the other credit company, you may be having an impact there. So be careful of that as well. The next question is, if you have a few houses using the limited company as a vehicle, is that tax efficient? Let me read it again. If you have a few houses using the limited company, few houses using limited company, you bought it on the house as a vehicle, is that tax efficient?
Yeah, so it's more and more popular nowadays. When people are buying investment properties, they set up an SPV, which is a limited company specifically to buy the property through. So the property is actually owned by the limited company, that you are the 100%, or you might be 50-50 with a friend or a partner. Now, people do that purely for tax benefits. If you've got a job and you're getting close, you're on a basic tax threshold, and you're getting close to the higher bracket, if you buy a buy-to-let in your personal name that you own, the rental that you receive every month is taxable income. It might tip you over to the bracket where you're paying higher tax. So straight away you're losing a lot of that rental income, the benefit, purely because you're getting taxed on that. If you buy it in a limited company, it's not on your personal tax. It could be on its company tax, so corporation tax. And there's different ways that you'd get an accountant to structure it in a certain way to basically have tax benefits. Now, what we always suggest to people is go and speak to a tax specialist. There's accountants, there's also tax specialists who would be able to structure it in the best way to make sure that you're getting the best out of it. But in short, it would depend on your personal income amount, but it's more and more popular nowadays for people to buy through a limited company purely for tax efficiency.
Yeah. I believe the person that asked the question, that has been answered. What about if you have a sole trader? Would the lender consider, outside of individual, if you have a sole trader company and you want to buy on that company, would they consider you differently from yourself?
No. So if you've already got a company and you want to buy a house through that trading company, you wouldn't.
What is a sole trader?
Yeah, so they wouldn't. If you wanted, so you can't buy a property through an already existing trading company that's not been set up specifically to do that. So, for example, if you had a company and you were, selling clothes or doing any other business through that company, you can't then decide to buy a house and put it in that company. You'd have to set up another company, a separate company for it, to do it that way. You wouldn't be able to just mix and match. There'd have to be matching SIC codes, which the lender needs to have satisfied for that.
I think that's clear now. The next question is, can money be borrowed from bank for, I think we've done this. Could you please talk a bit about lifetime ISA? Do broker encourage this? ISA.
So yeah, usually the solicitors would deal with that, so people can put money into an ISA on a monthly basis, and that will be used towards their deposit. All we usually say to people is just to make sure front end, when you're speaking to your solicitor, that they are aware that your money's coming from an ISA, because sometimes to activate that it might take a little bit longer, so they'll need to know that prior to, at the very start, just to avoid any delays when it comes to exchange and completion on that property.
How long do you need to stop using Clama before I apply for my mortgage?
So it's not a case that you can't use Klarna, because it's there for a reason. I know people who do very large orders, and they order loads of clothes in loads of sizes, knowing that they're going to return 90% of those clothes. So beneficial for you for a cash flow thing to maybe only have to pay for a third of those, or a third of the clothes, because they know that they're going to be sending them all back, so they won't have to make that second and third payment, because a lot of the clothes have already been returned. So it might be a case that you're doing it for that reason. It's not a case that you can't get a mortgage if you're using things like that. It's just something to definitely keep your eye on, and try and reduce the amount of times that you're letting searches be done on yourself to do Klarna, because it's one of those things that will show up on your credit file, and lenders might get spooked by it. So it's something that's quite new. I knew from speaking to a few lenders and business development managers that they were going to start clamping down, or it was going to start impacting people. But the first time actually happened within the last sort of month and a half, where the only reason we could see, or when speaking to a BDM about why there was a decline on a agreement in principle, we couldn't work out that they've got good credit, there's loads of income, it's well affordable, they've got no traumas on their credit file. The only thing the BDM could look at and say to me, I think it is because there was about 10 Klarna searches, and it wasn't even the case that they'd done them every day. It was over quite a long period of time, of months, but that was the only thing he could think of. So it's not a case that you can't get it if they're in place. It's just something just to be careful on. If you are looking at buying a house, maybe just go easy on that for a few months leading up to it, because the only thing I can think of is when we're doing our training as mortgage brokers is we're always encouraged to basically think as the lender, would you lend this person money? And if they look like they can't afford the clothes that they want to wear, then do you want to lend money to them? They might not pay the mortgage. So it's one of those things. It's not a definite no, but just be careful on it.
That's great. So those of you, please. Amen. Somebody's asking, is there a way you can to access a report on your credit performance history? Yeah, I think I can answer this. Subscribe to Equifax, subscribe to Experian, and there are some other ones. Like I pay about £14 on Experian. I've been paying it for many, many years. So because I want to know what comes on my credit at any point in time. Not just because of me, even for the church.
There's one we encourage called Check My File, and you can download a report, and it usually shows 3 credit reference agencies. So if you're, and it's quite surprising that a lot of the time it will pick up information, credit information on maybe 2 of them, but one of them might be blank. So it's a good job that we didn't just say, oh, can you only get your Experian? Because if we'd have got that, it's got missing information on it, but it's visible on the other 2. So it's called Check My File. You can download your report, and there's a trial period. I usually tell people just to download your report, then remember to cancel it, otherwise you're going to start paying monthly, unless you wanted to leave it running and keep looking. But yeah, Check My File is the best one to look at usually.
There's another one called Credit Karma. Those ones are free. You can just use that as well. So there's a lot of questions, but I'm going to have to scan through. Somebody's asking, what schemes are available to help you save a deposit? I think you spoke about this already.
It is difficult. The deposits nowadays, it's tricky. There's a couple of lenders that will do the 0 deposit, or the what would be classed as a 1% deposit if you're buying up to 500,000. But in general nowadays it's more and more difficult, and most people are relying on mum and dad to gift. There's ISAs and things that you can look up to try and save money, where you'll get a contribution as well. But in general, there's not really much that we can help with on that, other than just basically try and save, cut out certain preferences that you might have, or things that you don't need to do, to just try and save up as much as you can towards that deposit.
Another question: what length of employment is accepted for mortgage? Any employment.
So, to be honest, that it's a tricky. Well, that again depends on your profile. If, for example, you've started a new job or you're starting a new job and you've got a letter confirming the start date, your salary and all the details, there are lenders that will actually go ahead with that on the basis that, right, we know they've signed a contract and agreement, they're going to be starting this job on, I don't know, £35,000, it's an employed permanent full-time role. So there are lenders that will go ahead based on that contract. So you might not have even started that job. What they will, well, what a lot of the lenders will look at is plausibility. Just because I want to get a mortgage and I want to buy a massive house, but if they then say, okay, well, can I have your P60 for last year? I've been unemployed, sorry. They're going to say, no, you need to have a track record of actually being employed. They like to see that you've been working for, usually some lenders will be saying 12 months, or you've had a job and then you had maybe a break, you might have changed jobs and there's been no longer than a month or two break between those jobs. If you're having 3, 4, 5 months breaks between jobs and then you come with a contract saying I'm starting next month, they might not like it. But in general, if you're just moving from one job to another and there was a couple of weeks break, but you've got a contract saying I'm actually taking a new job and there's a start date within 3 months, then there are lenders out there that would consider taking that new income.
Like those that are doing like IT contractors.
Yep.
And you are moving from, maybe you had 6 months, then they renewed you.
Yep.
All those things will influence them. So
Yeah.
before, I think I have one question from the house. Before I do that, so that I won't forget this, I think can you please shed more light on Moneybox? Moneybox. What is Moneybox? Savings. Okay, we are talking about savings or deposits. I think he has answered that.
Yeah, I was going to say.
Okay, so, okay.
Yeah, that's more investment stuff, and that's something that we would refer if someone was discussing kind of investments, pensions, and stuff like that. We've got partners that we work closely with on that, but we usually stick to the mortgages and the insurance stuff as well.
James, somebody's asking you a question. They said, how much is your charge? How much is your fee?
It always depends. Now, it's a tricky one because if you go to the high street or if you looked for a mortgage broker online, they're probably going to charge you anything between £500 and possibly £1,000. They might charge it up front just for their time, just to have the appointments. We usually, as a firm, try not to charge when possible. Now, there's a couple of factors on that. So if you're borrowing a very small amount of money, so the way it works is we get paid by the lender a commission for placing you with that lender, and they pay us a percentage of the loan amount. So if you were borrowing, I don't know, a good example is the guy who wanted a very small mortgage. If you were borrowing, I don't know, £50,000, it's not going to be worth very much to us, at which point we would have to charge a fee. Usually we try not to go over £500, and that's basically to pay for the time and the back-end support team as well, because once I've found a product, given my recommendation, you'd then be passed over to a support team that's in-house as well, so that if you ever had any questions or needed to make contact with us, like Stephen said, my phone's usually ringing a lot, so I'd be on the phone on new appointments. I wouldn't want you to feel like I'm ignoring you or you can't get hold of me, so you'd always have contact through our support team that would be able to help. Obviously we've got to pay for those guys as well. So in general, it's a difficult question to answer because we don't have a set fee in place. It usually is dependent on the loan size or the complexity of the application. If there was a high amount of adverse credit and we knew there was a lot of research going to be done on it, purely because we can't just go to the best lender that's coming up on a sourcing platform purely because there's missed payments, defaults, then we're going to have to do a bit more work on it. Potentially vulnerable clients, there's things we have to do in the background for compliance, but in general we try and keep the fee to a minimum, sometimes nothing if you're borrowing a certain amount of money and it's a very straightforward application, but we would always disclose that up front as well. It wouldn't be a case that you'd get into an application, you've already had an application submitted, a mortgage offer's landed on your desk, and then we send you an invoice for £500. That would never happen. we wouldn't submit the application without discussing that with you guys as well before, and we'd get your agreement before doing it as well.
And one other thing about James is that he will always speak to the lenders, looking at your situation before he actually proceed to search your credit. So it makes it good for you. I think Bro Kingsley has a question.
Hi, James. I just want to use this opportunity to say a big thank you again. We've had a business transaction before, which was very, very successful. But I've not really said thank you to you in public, as it were. So thank you very much.
That's
So
all right.
moving to my question, really. People might be asking, why is this how we got our mortgage through Mr. James.
Mm-hmm.
So, yeah. First question is, what's the age cap for a new mortgage?
Yep.
I know, like someone who's over 60s, can someone over 60s or over 70s still be able to go on the property ladder? And do you want to touch on that first?
Yeah, so in general, most lenders have a retirement age that they set in place of usually 70. Some have stretched it to 75 now. So some go to even 80. So it's a case, if you're 35, you could take a 35-year mortgage. And what a lot of people like to do is stretch it out as long as possible just to keep the monthly payment down. The longer you borrow over, the more payments you make, obviously, the lower that monthly payment is. Now, our advice is to always take the mortgage over the shortest term that you can. That is affordable and comfortable for you, because although stretching it over the longest term, up to age 70 or 75, might mean that it's a little bit cheaper every month, it does mean that you're paying more interest, because the longer you borrow, the more interest you pay. So it's striking the balance between your preference of not using all of your money to pay for your mortgage, because then you need to eat and you need to live, you need to enjoy yourselves as well. You don't want to have this massive house but then just be stuck in there because you've got no money left. So you want to strike a balance between taking the mortgage over, maybe not the longest period, because just to keep the mortgage payment down and you've got loads of spare money. You might want to bring it in a little bit just so that you're paying less interest as well. But in short answer to your question, people, you can borrow, with some lenders will lend you up to age 80, but it would have to be plausible as well. Because if you turn around and say, what's my retirement age? And that's one of the questions that's in the fact find personal details form to start with. If you're, I don't know, if you dig holes for a living, or if you're a scaffolder, a lender's probably not going to see it plausible that you can work till age 80. But if you're a marketing manager and you work in an office, they probably will say, okay, that's fine, you can work till age 80. So it just depends on your profile as well.
Well, what I was trying to catch there is really, if I was, someone who's looking for a mortgage, I'm already at retirement age, say at 80 or 75, yeah, already at retirement age, can I still get a mortgage?
It's very difficult. There are certain lenders that might do different types of kind of retirement lending products, but in short, it's going to be more and more difficult and unlikely, but it would be on a case-by-case basis, depending if there was still income, if a client can evidence income into retirement. So you might be, I don't know, a director of a company that can pretty much run without you doing anything. You might own a company where loads of people work for you, and they're just, whether you're in the door or you're on the beach somewhere, if the company's still making money and the lender will do their own due diligence just to check that, then there's a possibility that they might lend. But at the same time, there are certain lenders who have, the majority of lenders have a max age at the time of application as well. So they will tap out and say, we're not lending to you past this age.
Okay, thank you. And in the case of a joint mortgage, where the husband and wife is on a mortgage, can one of them, obviously there's a principal and a joint, yes, can the second owner step out and do a single application or single mortgage and then become
So to own two properties, you mean?
yeah.
Yeah,
So,
so-
like what I'm trying to say is, a case where you have a couple, joint application, get a mortgage, they now own a property, and opportunity comes for the other person or one of them, either one, to be able to go solo, as against now with the first-time buyer or because you said in the beginning that getting a buy-to-let, is it going to be a buy-to-let? Is it going to be a first-time buyer? Then, with regards to the initial deposit, is it going to still be the 10, 5, whatever percent, as against the buy-to-let rate?
So, a couple of different things on that. So if you buy a house jointly with a partner, if one of them wants to come off the mortgage, and because you've seen an opportunity to buy another house, and that person wants to buy on their own, it's two separate things. If you come off that mortgage, that we would have to remortgage basically into one person's name. So that would be in its own application, because it would have to be affordable for that person to take the mortgage on their own. So if it's not affordable, then we wouldn't be able to remove someone, because, for example, if you've got a joint mortgage of £300,000 because you've got joint income of £90,000 combined, if you times that by 4.5, 5, you're going to get to that £300,000. But if, say, the highest earner decides, I want to go and buy another property, take me off this mortgage, but one of the people in that who's going to be taking the mortgage on their own is only earning, I don't know, maybe £25,000, we can't do it, because you can't remortgage for that person who's only earning the £25,000 to take the £300,000 mortgage on their own. So it would have to be affordable to start with for the person to take the mortgage on their own. Second part to that, if you wanted to go and buy another residential property to go and live in on a residential mortgage, again, that's fine, as long as it was affordable to remove you from that mortgage for the other person to continue with it. That's the first part. And then second of all, is it affordable on your own to go and buy that property again? There's nothing stopping you doing that. If you wanted to buy it as a buy-to-let, realistically, most lenders are going to want a 25% deposit. There are some lenders out there that will do it with a 20% deposit. I think there might even be one or two with a 15% deposit, but when you start talking about those products, the interest rates are through the roof. So sometimes it won't fit on the rental figure, so it usually works out best if you could get a 25% deposit to then do it.
Okay, thank you so much, everyone. It's about 7 minutes past our time. The good thing is, you will get his number. You can always book an appointment to speak to him. Because of time, I don't want to keep people here. However, before he goes to sit, there is one thing I picked that I want to let you know concerning your job and the pay slip, how many month pay slip you need. I think some lender ask for 3 months, some 6 months. In case of my home, they ask for 1 year. I don't know why. They said I'm a special person. So from 6 months, he knows about it. From 6 months, they said we need 1 year. And they had to go through my account for 1 year. So prepare for the worst sometimes. God bless you, everyone. Thank you so much today for coming. We really appreciate, and I believe that people are really, really blessed.
That's my pleasure. Thank you for having me.
So make sure you get one of these complimentary cards. He has, ample of people that work for him. So if he's not able to pick your call, he might direct you to them, but you will be looked after. Amen. Thank you so much.